It is the crude oil prices which continue to be very volatile. We saw near 3% decline overnight, and we are trading more than a percentage point down in the Asian markets right now. It has to do with the fact that markets are looking at enough and more supplies. The IEA says that 1 million barrels per day of a surplus is what they are accounting for the first half of this year. And then apart from that, there are demand and travel concerns also because of the coronavirus, and that seems to be weighing onto the prices. It's a 7-week lows on the crude oil prices on your screens as it's trading right now. Peter McGuire, CEO at Exim Australia, now joins us to discuss that further. Peter, hi, good to have you. What is your sense, first of all, on the IEA statement of a surplus of 1 million barrels? The S&P Global Platts says that the spare capacity globally is 3 million barrels. So clearly, markets seem to be, taking these figures in.
Well, good morning, Manisha. You're exactly right. I mean, when you've got a surplus like that, it's just, I think, a realisation that, we are naturally awash with oil, so there's no real problems as far as from the production side. And the other thing, of course, is that that note coming from Goldman's, the clients estimating a $3 plunge if the latest coronavirus turns out to be a SARS-like pandemic. So those sort of issues are greatly impacting traders. Don't like to bet naturally against Wall Street giants like Goldman Sachs. So that's forcing things to be bearish at the moment.
Right. So what is your own sense? I mean, is this decline short-lived? Is it a good time to start buying here? Or do you think there is a bit of a threat when it comes to demand and the fact that the supplies are enough?
I think what you've got to look at, Manisha, is the unknown. As far as you've got 17 deaths, you've got infections of about 571 odd people at the present. And are those numbers prepared? Are those numbers going to climb over the next matter of days and weeks? How long does this go on for, and what is the magnitude of it? So it's very hard to take on board those concerns because you just can't try and rationalise a price point, what that can do to the market. And I think many traders, that's why they're more bearish than bullish at the moment. And that seems to be the natural course of events. We've got to let it unwind.
Sure. So, we're already down 5 to 8% for the U.S. crude and the Brent crude in this year until now, and the natural gas price is down by 11%, gasoline, heating oil, everywhere that you look in the energy sector, we are trading in the negative for this year now. Apart from the immediate threat clearly arising because of coronavirus, what is the rest of the fundamentals telling you?
Well, a couple of things. First off, let's touch natural gas. I mean, we're looking at bankruptcies across that whole shale issue in the States. You've got major concerns there. We understand what Trump's administration is trying to do as far as energy dominance, and they're locked in a battle for survival with prices falling, and they're hemorrhaged 4-year lows from that gas. So there's so many different moving parts to that, and you've got increased concern from funders as far as developments of additional sites or additional, as far as supply in the shale region. So all of those impacts are greatly, again, affecting price, bearish, of course, and that's really creating, I think, a lot more opportunity for traders to be short. And they're driving the market down, and it's been a great trade to be short.
So, Peter, when you say you could go further short from here, how much of a further decline are you looking at?
I wouldn't be surprised to take another 3 to 5%, maybe 8% for nat gas by the end of month. I think there's too much momentum to the downside, Manisha, at the present. So I think there's further softness. And then, you've got to evaluate that week by week, but there's nothing there to drive it higher. Can you name something to drive it higher? I can't.